So today was wild. CPI came in hot, the worst inflation print since 2023. Oil ripped above $100 again. The entire chip complex got sold at the open. Triple Q down almost 2% intraday. Every major chip stock down 5 to 10%. And then something interesting happened. Buyers stepped right back in. And by the close, SPY was only down 0.15%. Apple, Nvidia, Meta all closed green. So the question I want to walk through with you is this. Was today the start of a real top, or was that the dip buy of the year? Because what happened between 11 a.m. and 4 p.m. tells you everything. Quick thing, if you're new here, every day after the close, I break down what moved and why. The first half of the video is the market story, what happened, what it means. And the second half is where I share key levels on most of the followed names. So you can follow along if you would like and take a swing positions and see the setup play out. This is completely options focused. So if you find this useful, please consider subscribing. So let's start with the data. CPI came in at 3.8% year over year versus 3.7%. That was the expectation. That's the hottest annual inflation print since May 2023. Core CPI, which strips out food and energy, ran 2.8% year over year and 0.4% on the month versus 0.3% expected. And here's the part that matters most. Energy prices were up almost 18% year over year. Gasoline was up 28%. So the Iran blockade, the Strait of Hormuz closure, it's no longer just an oil story. It's now bleeding into core inflation, transportation costs, apparel costs, food costs, all running hot. This is the kind of print that kills rate cut hopes for the rest of year 2026. But here's where today gets interesting. The initial reaction was exactly what you would expect on a hot CPI print. By 11 a.m. Eastern, Triple Q was down nearly 2%. IWM was down 2.3%. The semi space was getting destroyed. Intel, Micron, AMD, everything was down. And crude oil ripped above $103. It was a classic risk-off setup. And then the buyers showed up. By the close, Triple Q's was only down 0.85%. SPY was down only 0.15%. Even more telling, Nvidia, Apple, Meta all closed green. Apple up 0.7%, Nvidia up 0.6%. So on a hot CPI day, that doesn't happen by accident. So what's the read here? Two possibilities. Either institutions used the morning panic to scoop up mega cap tech at a discount, or this is the same dip buying reflex that's kept this 6-week rally alive. Either way, the message from this close is the dip buyers are still in control. That is the takeaway from today's tape. Now, slow down with me. This is the lesson worth taking forward. When the market opens lower on bad news and closes near the highs of the day, that's called bullish reversal candle. Doesn't mean the rally is bulletproof. It means the dip buyers are still active and the bear case needs more evidence than just one hot data print. Compared today to a real distribution day, on a real distribution day, you would see selling into the close, volume picking up at the end of the day, mega caps closing red. We saw the opposite, selling at the open, buying into the close, mega caps green. That's not how rallies die. That's how rallies test their support. Anyways, going back to what I was saying. Now, what matters tomorrow? Cisco reports after the close Wednesday. Alibaba reports too. Both are AI capex tells. Cisco is your read on enterprise AI spending. Alibaba is your read on Chinese tech demand. And Trump is in China right now with Musk and Cook. So any positive headline on tech or rare earths become a major tailwind. Thursday, Applied Materials Reports, AMAT, is the chip equipment leader. If AMAT comes in strong and guides higher, the entire semi unwind from today reverses. If AMAT guides caution, the dip buyers might step back. And then there's the Warsh confirmation. Kevin Warsh, the incoming Fed chair, was confirmed as Fed governor today. Powell's term ends Friday, and Warsh takes over the Fed right in the middle of the worst inflation print in 2 years. That's the macro setup nobody pricing in properly. Bull case for tomorrow. SPY holds today's lows. Dip buyers keep pressing. Cisco beats. Alibaba beats. Semis bounce back. And that would be the bullish case. On the bearish side, yields rip higher overnight. AMAT pre-announcement leak. Dip buying exhausting itself. And the 9:45 to 10:50 a.m. Eastern window tomorrow would be the tell. Wait for the dust to settle down every single time. So today's market action gave us a clear answer at the close. The dip buyers are still in, but knowing that's only half the trade. The other half is knowing which levels held when the panic hit at 11 a.m. and which ones are the ones in line in the sand for tomorrow if it starts getting ugly. So let's get into it. Here are the key levels on the most followed names heading into tomorrow. Starting with Tesla, what a clean dip buy off the 425 area. This is the exact level we have been watching on this channel for days now. Ever since Tesla defended that 385 zone, this entire move has basically been vertical. And today was really the first real test of momentum. The stock pulled back, tested support, and buyers stepped in immediately. That's exactly what strong momentum names tend to do. Now, heading into tomorrow, the key becomes simple. Bulls want to defend 425. And if momentum continues, then watch for Tesla to start holding above 435. Because if that happens, the next upside target starts opening towards that 463 area. Now, that's interesting. Now, what's interesting is while Tesla already bounced hard, Palantir is doing something completely different. Palantir still hasn't fully recovered from that aggressive post-earnings selling, but the character of the chart is starting to change. And I want you to pay attention to this because we have talked a lot about how important 134 is on Palantir. And notice what keeps happening. Every dip below that area gets bought up quickly. That tells us sellers are slowly losing control. Now, this doesn't mean Palantir instantly explodes tomorrow morning, but this is exactly how swing trade basis begins to form. Right now, the stock is starting to stabilize between roughly about 134 and 136. And if buyers continue defending that area, then the next momentum push could start targeting that 145 zone. Nvidia is another chart that continues looking extremely strong. Remember, we have been talking about the importance of that 197 breakout for 197 support for a while now. Nvidia held that level for multiple sessions in the past, and then finally it ripped higher. And now we're seeing another important shift. Nvidia is trading above its previous all-time high, which was also its previous triple top as well. That level now becomes critical support, $217. And even today, when the stock dipped, buyers stepped in almost immediately near that area. That's a very strong sign. So, heading into tomorrow, watch for Nvidia to continue holding above 217 because as long as that structure remains intact, the momentum is still favors the continuation move higher. Apple is another trade that worked out beautifully after earnings. We kept talking about the descending trend line and how many times Apple have tried to break through it. Every rally attempt kept getting rejected around 275 because that area had become major resistance. But earnings changed everything. Apple gapped up on this day, and then the most important thing happened. Previous resistance actually turned into support. Ever since then, buyers have defended that breakout area almost perfectly. That's what turned Apple into one of the cleaner swing trade setups on board. Now the stock is pushing above its previous all-time highs, and heading into tomorrow, watch for momentum above $295. If Apple can start holding above that level, the breakout confirmation remains strong. And if we get any pullbacks, then the previous all-time highs near 289 around that area becomes an important place for buyers to step in as dip buyers. MU had another massive session as well. We talked about how important the 683 breakout was because that area held had acted like a major double top resistance on the name. And once MU finally cleared it, momentum accelerated fast. And what's impressive is even during today's weakness, the stock never really threatened that breakout area. That's truly bullish behavior. Momentum names that stay for far above their breakout zones usually tells you that institutions are still holding positions aggressively. So as long as MU keeps trading above 683, the structure still favors continuation higher. Intel is another chart where the levels continue respecting almost perfectly. We talked about the importance of $118 for bullish momentum to stay intact, and so far buyers continue defending it. For a deeper pullback, 114 becomes the next important support area. But honestly, as long as Intel remains above those zones, bulls are still in control of the short-term structure. So tomorrow, continue watching $118 closely because if buyers defend it again, Intel could start making another push back towards the $130 area. And finally, AMD. AMD continues showing why breakouts matter so much in momentum markets. We talked about 430 being major resist breakout level, and look what happened afterwards. The breakout level became support almost immediately. Look at this. Even when AMD tested that area, buyers stepped in and pushed the stock higher before the close. That's exactly what bulls want to see. So heading into tomorrow, watch for buyers to continue defending $430 because if AMD stays above that zone, then the next upside momentum move could start targeting that 470 area. So those are the major levels and setups I'm watching closely heading into tomorrow and the rest of the week. If you enjoyed the video and found the analysis helpful, please consider subscribing, and I'll see you in the next one. Take care.